Have you ever found yourself staring at a trading screen, finger hovering over the buy or sell button, but then hesitating? Not because you're unsure about the stock itself, but because you're not entirely confident about how you want to execute your trade? Are you aiming for immediate execution, no matter the price, or do you have a specific price in mind and are willing to wait? Do you want to protect your gains, or limit potential losses, even when you're not actively watching the market? Too often, new traders, and even some experienced ones, default to the simplest order types, unaware of the powerful tools they're leaving on the table. They might use a market order when a limit order would have saved them money, or miss out on profit protection because they didn't know about trailing stops. This isn't just about maximizing returns, it's about minimizing risk and gaining a true sense of mastery over your trading journey. Think of it like this: if you're building a house, you wouldn't just use a hammer for every single task, would you? You'd have screwdrivers, saws, levels, and a whole arsenal of specialized tools. Each tool serves a specific purpose, designed to achieve a better, more efficient, and safer outcome. In the world of trading, order types are your specialized tools. Each one is designed for a particular market condition, a specific risk tolerance, or a unique strategic objective. Today, we're diving deep into the powerful world of questrade's order types. We'll peel back the layers, from the most basic to the most sophisticated, exploring not just what each order type is, but when and why you would use it. We'll demystify the jargon, provide practical examples, and empower you to make more informed, more strategic trading decisions. By the end of this, you'll have a comprehensive understanding of how to wield questrade's order types like a seasoned pro, giving you a significant edge in your trading endeavors. Let's start with the foundational building blocks, the order types you'll encounter most frequently. First up, we have the market order. This is the simplest and most common order type, often the default when you hit buy or sell on questrade's platform. A market order is an instruction to buy or sell a security immediately at the best available price in the market. It prioritizes speed of execution over price certainty. When you place a market order, you're essentially saying, I want to buy or sell this right now, at whatever price the market offers. Now, while a market order guarantees execution, it does not guarantee the execution price. In fast-moving or illiquid markets, the price at which your order fills could be different from the last quoted price you saw. This is known as slippage. For highly traded, liquid securities like major ETFs or large-cap stocks, slippage is usually minimal, if noticeable at all. But for less frequently traded stocks, especially those with wide bid-ask spreads, a market order could result in you paying a higher price than anticipated or selling at a lower price than desired. So, when would you use a market order? Primarily when you need to enter or exit a position quickly, and you believe the current market price is acceptable, or when speed is paramount, such as trying to catch a rapidly moving trend. Next, we move to the incredibly important limit order. This is where you start to exert more control over your trade execution. A limit order is an instruction to buy or sell a security at a specific price or better. For a buy limit order, you set a maximum price you're willing to pay. Your order will only execute if the stock's market price falls to your specified limit price or lower. For a sell limit order, you set a minimum price you're willing to accept. Your order will only execute if the stock's market price rises to your specified limit price or higher. The key advantage of a limit order is price certainty. You won't pay more than you want to when buying, or receive less than you want to when selling. However, the trade-off is that execution is not guaranteed. If the market price never reaches your limit price, your order simply won't fill, and it will remain open until it expires or you cancel it. When would you use a limit order? This is your go-to for price-sensitive trades. For example, if you're trying to buy a dip at a specific support level, or if you're looking to sell into strength at a resistance level. It's also ideal for less liquid securities where market orders could lead to significant slippage. The advantage here is that you get both the loss-limiting or profit-protecting trigger of a stop order and the price certainty of a limit order. The trade-off? Because it's a limit order after being triggered, there's no guarantee of execution. If the market moves too quickly past your limit price, your order might not fill. This makes stop limit orders excellent for managing risk in less liquid or more volatile securities where slippage on a pure stop order could be substantial. Beyond these fundamental types, Questrade offers even more sophisticated order types to give you greater control. Let's explore some of these advanced options, starting with trailing stop orders. A trailing stop order is a dynamic form of a stop order that automatically adjusts as the security's price moves in your favor. Instead of a fixed stop price, you set a trailing amount, either a dollar amount or a percentage, below the market price for a long position, or above the market price for a short position. For example, if you own a stock trading at $100 and set a trailing stop of $5, your stop price is initially $95. If the stock price rises to $105, your trailing stop automatically moves up to $100, $105 to $5. It continues to trail the price upwards, locking in more profit as the stock climbs. However, if the stock price falls, the trailing stop remains at its highest point reached. If the price then drops to that trailing stop level, the order is triggered and becomes a market order to sell. This is an incredibly powerful tool for capturing as much upside as possible while still protecting against significant reversals. It's particularly useful for trending stocks where you want to ride the momentum but have a built-in safety net. Similar to the relationship between stop and stop limit, Questrade also offers trailing stop limit orders. This combines the dynamic adjustment of a trailing stop with the price certainty of a limit order. When the trailing stop price is hit, instead of turning into a market order, it converts into a limit order with a specified limit price offset from the triggered stop price. This provides more control over the exit price, reducing the risk of unfavorable fills in volatile markets, but again, with the trade-off of no guaranteed execution. Remember, successful trading isn't just about picking the right stocks, it's about executing your strategy effectively and managing your risk diligently. And at the heart of that execution and risk management lies a thorough understanding and intelligent application of order types. They are your control panel, your levers to steer your investment journey.